don't ignore tax planning. Like here we are coming up into December. If you haven't sat down with us or if you haven't sat down with your CPA to do some tax planning, I highly, highly, highly encourage you to do so because little tweaks here and there, Cory, can literally save you thousands of dollars. And I don't know about you, but I love saving money when I can.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Jake, thank you for having me.
Cory, I have a correction I need to make. My wife, my biggest critic, my wife, Rachel, I don't even know how, she doesn't really, I don't think she normally watches, but sometimes she listens when I'm listening to our show. Mm-hmm. I'm listening not for vanity's sake, Cory. I'm trying to get better. I freaking called the book James an adaptation of Great Expectations. It's not. It's The Adventures of Huckleberry Finn. So apology to our audience. It's an excellent book. And in fact, Cory, it did win an award. She was right. It came up for whatever the bookish awards are for best fiction book of the year or something. I'm really enjoying it. Have you started it yet?
I have. Yes. I read about the first 100 pages this past weekend and it was great. Yes. I have a feeling I'm going to fly through the rest of it too.
Agreed. So I highly, highly recommend that to our audience. It's an amazing book and I've been really enjoying it. Very easy to read, like you said. And it's been cool. Anything else, Cory, in your life before we dive into today's episode?
No, not too much. You know, Jake, it is, I don't think so. I don't think I have too much else. I think I'm ready to dive in when you are.
Well, I got one more thing before we dive
in,
Cory. I got one more. So this is our Thanksgiving episode. And so I want to hear two things from you. And I'll share mine, of course. But I want to hear, what are you thankful for? And what's your favorite Thanksgiving dish? It's a big eating holiday. So what do you got there?
What are you thankful first?
For? Yes, please.
I'm thankful for a few things. So I'm going to go ahead and throw them out there, Jake. First off, I'm thankful that we have the freedom to build this business, to make it the best that we can for ourselves and for our clients, of course. I'm thankful for my health, my family, and my wife that does a whole lot of things that keeps the world spinning around me. And as far as my favorite Thanksgiving dish goes, though, Jake, I would have to say it's probably the dressing or the stuffing. And don't ask me which one is which. Don't get me started on that because I don't know the right answer, and I'm sure whatever I say will be wrong. But it's rock solid. I like the whole Thanksgiving spread though. How about you?
Cory. Thank you. You know, I asked our team this last week in our team meeting, and I'm thankful for. I use this. It's a little. I don't think it's a cliche, but it's true. There's a quote out there that says, "A healthy man wishes for 1,000 things, and a sick man wishes for one thing." Right. So. My health, again, is number one, what I am most thankful for. In fact, I have I usually do it once a week. Well, I'll write down three things, right? Health, happiness, and Rachel. That's it for me, right? That's my thing. I'm thankful for that. But not only am I thankful for that, I want to bring attention and energy to those things, right? So I'm 43 years old, Cory, and I feel the healthiest I have ever felt, believe it or not, in my life.
Which is awesome.
Yes.
That's great.
Yes. And I do a lot with my diet and exercise. And most importantly, I think, or just as important as my mental health, I focus on all those things and I feel very strong. I feel very healthy. And so for that, I am very thankful. I don't know where this dressing thing comes from either. I call it stuffing.
That's what I always knew it as, for what it's worth.
Who calls it dressing?
I've learned a lot of things, Jake. It's just like the Halloween joke thing that I learned is not a thing everywhere. I've learned the same thing about dressing and stuffing.
So mine's stuffing. Now mine, funny enough, I grew up on stovetop stuffing, right?
Same.
But Rachel, my amazing, wonderful, hopefully she's watching this episode, my wife, Cory, she makes this homemade, she actually stuffs that bird with stuffing that she makes from home, and she puts bacon in it, bread. I don't even know what else is in there, but she does it, and it is amazing. Like, I frankly could probably only have that, and I'd be happy. And I like the dark meat
Wow.
of the turkey. I like a dark meat turkey. And then this is a long-standing Falcon family tradition with the
Mm.
leftovers. We make the turkey enchiladas. You gotta love the turkey enchiladas. So I got to go stuffing number 1, turkey enchiladas number 2, dark
Mm.
meat number 3 for me.
I might have to come to your house for lunch on Friday for those
Man,
enchiladas.
they are pretty good. I of course, have my own thoughts. I grew up with them, so it's more of a memory for me, but they're pretty darn good. I'm a
Mm.
big fan. All
Well,
right.
it's good though. It is good to have those traditions because I do think, Jake, I've spent probably the last 10 Thanksgivings or so with my in-laws. And it's great actually, since my parents and my family moved to Kansas City, my in-laws will now host my family as well. So we do one big family Thanksgiving, which is pretty neat. But my father-in-law makes basically hours before the Thanksgiving meal, Jake, these stuffed mushrooms along with eggplant
Ooh.
prosciutto. That I would
Ooh.
say both of those items have to actually belong somewhere on the top 3 list for me. It's just several hours before the Thanksgiving meal. So I'm grateful for that
Nice.
too. How about
Good for
that?
Bob.
That's
Good for
right.
Bob. Credit
Thank
to
you,
Bob
Bob.
there.
That's
Credit to
right.
Bob.
Credit to Bob
All right.
and Debbie
All right,
and
good.
Debbie.
Now let's take it away here, Cory. Enough about you're making me hungry.
All
Enough
right,
about
let's do it.
Thanksgiving. All right, Cory, you're going to kick off first this week. Cory, 5 things to do now to make your estate simpler for your heirs.
Yes, Jake. So this is a little bit of a morbid subject, but it's one that we have conversations
Yeah, we
about
were
with
just
people.
talking about
I
Thanksgiving, and
know.
here you go, Cory. All
I
right.
know, yeah. So to help your heirs avoid stress and conflict after your death, I mean, I say that jokingly, but that is the context here, right? When we're thinking about estate planning and legacy planning, this is part of the financial planning that we talk about with our clients, Jake. And a few of the takeaways here, though, specifically some of the items to make your estate simpler, I thought were really good. And the first one was just keeping your documents updated. So whether you have a will, a living trust, beneficiary designations, make sure that these things reflect your current wishes the way that you want them to, because a lot of people, Jake, will establish these things. A couple of decades will pass and they really need to be updated
So
regularly.
what do you say, Cory, to that? Like, is there like is there a trigger or a reminder you can give people? Like, because you're right. I think someone will buy a car and they'll forget to update this, or they'll open a bank account and they won't add a beneficiary because it happens. So do you have any tips for our audience on how to keep those updated?
Yes, absolutely. So I think that if you have a will or a trust in place, let me start with that, Jake, just because I've talked to a lot of estate planning attorneys that have said that, every probably 3 to 5 years can be a best practice to make sure that those things stay updated. But I also think even if you don't have a will or a trust, having some sort of system, whether it's a reminder on your phone, a reminder on your calendar, maybe once a year to make sure that those things are set up the way that you want them to. We obviously, Jake, when clients come to the office and Falcon and meet with the planners and you and I at Falcon Wealth Advisors, or even virtually, we like to make sure those beneficiaries are updated the way that they should be. But I think at the very least, it is a good idea for people to set up a reminder on an annual basis to revisit those things themselves.
Good. All right, good. What's next on the list here?
The next one, this is interesting, Jake. So addressing digital assets. So think digital assets, one like email and passwords, but also cryptocurrencies is what was highlighted in this article, Jake, and making sure that ultimately your beneficiaries know where your assets are at and they have access to the digital assets like your email or your online accounts, which there can be a lot of steps involved in doing that. But recognizing that the digital assets are something that's relevant in the world today in 2024 is helpful for people.
Yeah, and I would argue you could even add social media to that too, right? Like,
Yes, that's right.
that way you can shut all that stuff down. I mean, unless you want to keep it open, but like, yeah, that's another good one. All right, good. What's next on your list here?
Next is assign personal property in advance. So create a detailed list of personal property and its intended recipients to prevent disputes among heirs. This could be a family heirloom, a watch, jewelry, whatever it might be. Also, in the process of estate planning, a lot of that can be outlined inside of someone's will or their trust as well. But it's something that you can do in advance. Leaving good notes, prepare a folder with important information, including account details and contact info for attorneys, wealth advisors, and to inform heirs where to find things. And lastly, Jake, is to strive for conflict avoidance. Consider naming a neutral party as executor or a trustee to avoid sibling rivalry and explain any uneven asset distribution to prevent misunderstandings. And this, Jake, really, I think, is where something like a fiduciary trust company could come into play.
Yeah, I like it. I like it. So, what are some of the? Let's talk about the pros. Let's debate this a little bit. So, I got one for you. The leaving good notes.
Yeah.
This,
Yep.
this is what this is what's tough, Corey. Is that
Yep.
sometimes people think they need to keep every piece of paper that has their name and their bank account information on it,
Mm.
and it can be very overwhelming for their heirs to say, "Why did so and so keep a bank statement from 1984?"
Yep.
Right? And I say that a little bit joking, but a lot of people do that, and I frankly have a lot of
Mm.
stuff. Like, I need to go through my own files because, like, I don't know why I do this. Do you do the same thing? Like, I have like a duffel bag, which is probably not the most great way to, but I've got like old statements and stuff in there that I probably just need to shred. Like, but I don't know. Do you do that? Do you have stuff where you've kept statements for a long time? I mean, how long have you lived in your house?
4 years, almost
Okay, so
5
did you
now.
purge that when you moved, or do you still have that stuff?
I have the duffel bag full of documents too, Jake. I do. I am guilty. I have a system though and a process in place, at least, to review this. Like I have, Jake, one thing that I've done personally is I've exported basically into a secure file
Yeah.
usernames and passwords, right? For somebody to be able to log into bank accounts, et cetera. But my
Hold on.
process,
Hold
Jake,
on.
is back to
Hold
go
on.
ahead.
Hold on.
Yeah. Yeah.
Hold on. So
Yep.
you said you have a process for username and password. So now are you suggesting that any paper from that bank, let's say it's XYZ Bank, it doesn't matter. But if you're like, all right, here's my password and my login for XYZ Bank. So therefore, you don't feel inclined to have to hold the paper anymore. Is that what you're getting at?
Exactly. It depends
Okay,
on the
good.
document, but yes, exactly that.
All right, good. What else were you saying? Sorry, you're kind of soapboxing on me a little bit. I wanted to hear.
Soapboxing. No, that's so I think basically that's where I was going with it is the physical documents. It's reviewing what I have and whether or not I would have access to the same documents electronically. If so, I don't need to keep the physical document. If
Yeah, but
not,
what if
I
you
do.
don't? What if you don't? What if I had a bank account in Texas and for some random reason I've still got a statement from there, and I haven't lived in Texas since 2006.
Is the bank
So
account funded?
no.
Okay.
So then what do you say? Isn't there years? Isn't like 7 years is always kind of what I say. I hear some banks say 4 or 5. Do you have a general rule that you recommend people hold on to? Let's say again, I don't have a login on. Let's say I don't have an online login to a bank. How long would you hold on to those statements?
I would keep the final statement of the year. I would basically keep the last statement of the year each year
For how many years? Forever? How
in
many years?
perpetuity. In 2024, I would have the
See?
2023 statement, but I could get rid of things before that.
Oh, the just 1 year at a time. I see.
Yep.
You don't go back 7 years?
Literally something from last year, from December of last year, that would show me here's the bank account that I have in Texas. Here's the money that I do or don't have in the account. And then I would just replace it this December.
What if the
But
bank
even
account's been
better, Jake, I
closed?
would
What if the
maybe
bank
move the
account's
money
been
out of the
closed?
bank. Go
What
ahead.
if the bank account's been closed?
Make a note on the document that says account closed and then shred it.
Why
What
would
else
you even
would you
make
need
it?
it for?
Why would you even make a note on the document if you're going to shred it?
That's the way that my brain works, Jake. I would literally write it on the document before I shred it so I could say, all right, this has been
Really?
addressed. Nothing to do. Shred it. Yep.
Really? Okay. Good. I think yes. So again, I think and you know what? When in doubt, I think so. That's what I'm trying to get at. When's the doubt? Because I think a lot of people don't know, Corey, and so like
Yeah.
me,
Yeah.
so I think when in doubt, make an electronic copy of it and get rid of it. And then just even if you just say archived, like if you create a folder,
That's right.
archived, I don't know if I need this or not, but here it is. Because the last thing you want to do, Corey, is shred something that your heirs might need.
Exactly. I
You know,
agree.
and a lot of our older clients, they don't do much digitally, but I would encourage them to get the help of your kids or your heirs to help you get digital copies because that's just going to make, everybody's, transition because it's already, let's talk about, I mean, it's a horrible emotional time. The last thing you want to do, Corey, is go through a duffel bag.
That's that's right.
You know what I
You're
mean?
right.
So, let's scan that stuff in. Let's meet with our financial planner. Say, look, I got a duffel bag full of stuff. I need to know what I should keep or not. Or meet with
Yes.
your accountant. I think your CPA would be a great person to go over this stuff with. See what's important, see what's not. Scan in what you can scan in, shred the rest, and let's clean that up for your heirs. Good, Corey. Good. Let's move on to the next one here.
Okay, can I make one more quick point here,
Of
though, Jake?
course.
I
Of
do want to
course,
share,
Cory.
though, because we did talk about the pros and the cons of this, right? Specifically, the point about striving for conflict avoidance. I just want to mention this on the show. That choosing one child over another as an executor or a trustee without a clear explanation can create resentment and conflict
Yeah.
among siblings.
You think?
So yes, exactly. Basically having those clear expectations or even considering a neutral party like a professional fiduciary trust company. We've worked with many clients that have utilized those resources specifically for that reason.
Good, Cory. All right, good. Can
All
we go
right,
on the
Jake.
next one now?
All
Can you
right.
stop being a Debbie? Can you stop being a Debbie Downer on my show, please, Cory?
Okay. All right. You know what will be way more exciting to talk about is taxes and how we can
Let's
lower
do
our
it.
tax bill, Jake. So these 5 tax moves can lower your 2024 tax bill. What do you got?
Yes. And this is what bothers me. I'm glad you said that just now, actually, because this is what bothers me. People don't want to talk about taxes, but today, Cory, I want to talk about saving you money. It's almost as good as making you money. Like, I don't know. When a client walks out of our office after doing tax planning and we've saved them thousands and thousands and thousands of dollars. Again, their CPA is going to sign off on this for disclosures. We're not tax advisors, but we do tax planning. It's a huge deal. So let's not ignore it. And I like this article, Cory, because it provides practical tips that taxpayers can use to reduce their tax bills for the upcoming year. And there's several strategies I want to touch on today with you. So number one is fund a 529 plan. These are college education plans. Basically, it allows money to be withdrawn from the account tax-free, but you may be able to get a state tax deduction by putting money in there. Now, there are rules and penalties that apply, but I'm curious, Cory, you just had a baby. I'm going to call you out here. Have you opened a 529 plan yet?
Not yet.
What are you waiting on, Cory?
Not yet. I'm actually going through the exact tax planning process that you're talking about yourself, Jake, from a short-term and a long-term tax standpoint. The only reason I haven't done this yet, Jake, is because this year I'm looking at converting an IRA, actually, that Cassie has, to a Roth. So the liquidity for the taxes and funding the 529, but it is definitely on the short-term radar.
You got to do it. You got to do it, Cory. All right,
and I might super fund it. I might even super fund it, Jake.
There you go. Now you're talking. There. Super fund that sucker. All right. So number 2, Cory, is convert to a Roth IRA, which you just talked about. So moving money from a pre-tax traditional IRA to a Roth IRA, this can be beneficial, especially if you expect to be in a higher tax bracket in the future. This could allow for more tax-free withdrawals in retirement. And even though, Cory, I'm in a high tax bracket right now, I still do Roth conversions personally. So again, if you're working, you still can do a Roth conversion. This isn't only for people that are retired. And you just mentioned you might be doing one for yourself this year. All right. The next one is harvest losses. So this would be selling investments at a loss. This would be in a brokerage account. It's nothing to do with your IRA or 401k. So don't even think about it there, or your Roth. Don't think about it there. But this would be selling investments in a taxable account to offset gains and therefore potentially reducing your taxable income. It's called tax loss harvesting. It can be particularly useful in a volatile market. The problem is, Cory, that we've had a great run in the market the last 2 years. So typically there's not a lot of losses to harvest. I want to get in the pros and cons on this here in a moment. I've got a couple more here. Finesse your tax bracket. So adjusting your income to stay within a lower tax bracket can result in significant savings. So again, you might defer income or accelerate some deductions. And then the last one, I want to hear your opinion on some of these strategies, are charitable contributions. So you can donate appreciated stock to a donor advised fund, for example. That might be able to help you sidestep capital gains and potentially get a tax deduction. Also, if you're in your 70s or over 70 and a half, you can do something called a qualified charitable distribution from your IRA, and that may be a tax-free event. So, Cory, you got any pros and cons on these strategies?
Yes, I think the overarching theme, Jake, that I take away from this, right, is if you're funding a 529 plan, right, you need to have the cash to fund it with. If you're going to do a Roth conversion, you need to have the cash to pay the taxes. So from my perspective, we're talking about tax planning and we're talking about reducing lifetime tax liability. But the downside is sometimes that could create more tax liability right now, right, as opposed to later. So I think that recognizing that long-term tax planning strategies can require you to pay more money in taxes on the front end. Not always, but I think that is very much, Jake, one thing that probably stops some people from doing this more often.
Yeah, that's a good one too. And then tax loss harvesting, the con to that
Mm.
is like, and I'm not going to get into the details of it today. If you want to talk about it, certainly book a time with our financial planning group. But if you sell a stock to realize a loss, you typically have to wait 30 or 31 days for the wash sale rule to apply, and you could miss a market bounce back in that time period. So you're actually timing the market a little bit. So tax loss harvesting isn't a no-brainer. Not everyone should do it. So you got to be careful with that also. So again, but my point is, don't ignore tax planning. Like here we are coming up into December. If you haven't sat down with us or if you haven't sat down with your CPA to do some tax planning, I highly, highly, highly encourage you to do so because little tweaks here and there, Cory, can literally save you thousands of dollars. And I don't know about you, but I love saving money when I can. And again, it
Absolutely.
just nobody wants to hopefully most people don't want to overpay Uncle Sam. And so why would you do it? Just take the time, take 30 minutes, take an hour out of your time, do some tax planning. Just make sure everything's buttoned up and tidy. There's no reason you should be overpaying. All right, good. We got time, Cory, I think, for one more. Let's go one more here. Ready?
All right, let's do it. There's a lot here. Let's do it.
All right, here we go. Boldin's retirement rules. Oh, wow, Cory. 18 guidelines for financial security in this crazy modern world. What do you got? 18? We're not going to go through all 18 of these, are we?
We don't need to go through all 18, but I think that there is some
lot.
useful information for us to talk about here, Jake, because this particular article basically presents what they were arguing are new retirement rules to align with modern realities. But also this was challenging outdated notions about retirement planning.
All right, let's hear it.
Some of the key takeaways include 1, take control, understanding personal finance and actively manage your retirement plan. In my mind, Jake, this is all about financial literacy, which is what we talk about on Upticks and what we're going to continue to talk about in our meetings with clients and on the show. But the main thing for people to take away is that taking control, right? Empowering yourself. You've talked about this, Jake, in Retiring Right in the book that you published earlier this year.
Right, Cory. Good one there, Cory.
We talk about it on Upticks, is that you want to take control and to take your financial literacy seriously, because the reality is nobody's going to take control for you. So I think that is, no one's just going to plan out your retirement for you, that it does require you to take some control.
I got a little rant on that, Cory. So again, we want to claim that we want to be free, have freedom, live in a free society. You're exactly right. If you want the government or your company to take control or take over your retirement for you or take care of you, then typically you got to give up some of your freedoms. And so I say most people would argue they want to be free for choice and control and to do things on their terms or their limits, right? So you got to be an adult here and you got to understand your personal finance. I love it. Good. What's another one? We gonna go through all these?
Yeah, no, that's all right. So I'm gonna highlight the ones, Jake, that I think are best for us to talk about. All right,
let's hear another one. What do you got?
You'll like this one. There's no right way to retire, despite the title of your book, Jake. But this, I think you maybe agree with this here. Tailor your retirement to your goals and resources. A rigid savings target, like $1 million, for example, in retirement accounts, may not apply to everyone.
Yeah. It's not cookie cutter. I like that. That's a good point. There isn't just because your brother, sister's, neighbor's dog did something, bought an annuity or whatever crazy thing they did, doesn't mean you need to do it. I like it.
Exactly.
But it's not really modern, Cory. You got something that's modern in this list? You said it's a crazy modern world. What's up?
Okay. Yes. All right. You can tell me if you think this is modern, Jake. Focus on possibilities. Embrace a positive mindset to reduce stress and explore financial opportunities. I think that's a bit more modern, as is pointing directly to minimizing investment costs. Be aware of fees, be aware of costs, and especially AUM fees, assets under management costs on low-cost index funds.
Did it say that in the article, or is that your take?
It did. It was in the article.
Oh, good.
Good. This was arguing for, if you're not working with an advisor, to look for low-cost investment options. But if you are working with an advisor and they're just charging you a fee to buy low-cost investment options, you're taking something that's cheap and making it quite a bit more expensive.
I agree, Cory. I love it. Good for this article. You know how I feel. Hopefully our audience by now knows how I feel. But if you're new to Upticks, and again, thank you for tuning in. Please like, share, subscribe to our content. Our account continues to grow. We're fast approaching. We're probably by the time this airs might be over 2,000 subscribers on YouTube. So thank you for everyone out there, again, that have subscribed. But yes, I agree, Cory. You should absolutely not be paying an advisor a percentage of your account to put you in low-cost index funds. You're going to underperform those index funds every single year by that fee. Locked in. Underperformance. It's stupid. It's a big problem in the industry. You and I, frankly, if we did every show about that, Cory, it'd be worth it because it's a big problem. And I'm glad this Boldin article brought it up. Good. We got time for a few more. You got a few more out of your list.
Let me throw a few more at you here, Jake.
Something modern. Give me something modern.
Okay. Planning for longevity. So longer lifespans, rising health costs, and varying retirement phases. I think the different phases of retirement that we talk about here. Optimizing.
Hold on. People are living longer. I love that. That is a modern take on it. I mean, sadly, when Social Security was invented, the life expectancy of a typical American was in their 60s. Well, now
that's exactly right.
Now people are living in their 80s, 90s, over 100 years old. So you got to plan for that, and that's more of a reason to hire a wealth advisor who's going to act as a fiduciary. And I'm a lot darker today, aren't I? Because I raised my blinds as I look. So
yes. Yeah, you're contesting with the sun there.
I know. So forgive me. The clouds were out, so I thought the blinds up would be better. So forgive me if I'm in the shadows today, Cory, but of the sun. But my point is, you have to plan for a 30-year plus retirement, and I think that's job security for us, Cory. Is that we certainly want our clients to live long, happy, healthy lives. But because of that, your nest egg, you might have worked for 30 years, but now that money's got to last 30 years. And so that's a good one, Cory. That is modern. You got any other modern ones?
Yeah, it absolutely is. I think flexible retirement age. This is more of a modern idea, Jake. Retire when you're ready, financially and emotionally, rather than following traditional norms. Meaning, we have clients that are aiming to retire in their 40s, and we have clients that are aiming to retire in their 70s, and everywhere in between. And I think that recognizing
you have a client retiring in their 40s. You have a client retiring in their 40s.
Yep.
Wow, good for them. I don't know if
I work with one client who retired in her late 40s, and work with another client who's planning for age 45.
Wow, good for them. I have a ton of, and again, there's no judgment. I have clients that work in their 80s.
Correct.
Or 280 because they absolutely love what they do. And so you're right, though. I love that. Another good modern take. And I love that the sun's out. Winter is here. I am shadowed.
No. It's good. It's good. I think, though, I thought that was a good takeaway. I also think the multi-generational planning, going back to living longer, Jake. So planning for the financial needs of potentially both older and younger family members, right? Someone thinking about taking care of their parents and taking care of their kids. I think that's more relevant today. Prioritizing well-being, Jake, focusing on emotional, physical, and social health alongside financial goals, recognizing that those pieces are very important. And I also really liked this: take calculated risk, balance portfolio growth with risk management, and adapting traditional investment rules to personal needs, but recognizing that there can be a time and place to take calculated risks, the same way there's a time and place to not do that. And then value your time, Jake. Align financial decisions with what truly matters to you, emphasizing quality of life and recognizing that your time is ultimately something that matters almost more than anything.
Yeah, it's good. And the whole point of this is complex.
It is.
And I like, you got some other notes in here, but don't be over reliant on tools, time, and effort.
Yeah.
I mean, it pays to hire somebody to help you with this stuff. It pays to have a good attorney. It pays to have a good accountant. And it pays to have a good wealth advisor. It's just like I've got an eye doctor, I've got a dentist, I've got other doctors for other things. And so same thing with your finances. Take the time. Where you're not educated, educate yourself or hire a professional that will educate you. You got to take this retirement into your own hands and understand that everybody's plan is a little bit different. It should be.
That's exactly right. But there's a lot of complexity, like you said, and behavioral challenges, right? Where our emotions, we're wired to want to do the wrong thing at the wrong time, oftentimes. And that's the reason, Jake, that we talk so much and do this show, and why our clients at Falcon Wealth Advisors hire us.
Yeah. Good one, Cory. Good one. Well, I think we're right on the time here. You got anything else you want to add before we wrap up?
I don't think so. Hopefully that was modern enough, Jake.
I appreciate it. Was long enough. I appreciate it.
Definitely long enough.
I appreciate the list, though. And thank you, Cory, for joining me as always. Please forgive me my rookie move. I thought I could draw the blinds today. It didn't really work. But
It's all right.
I'm
Until next
here.
week. You can
I'm
do better
here.
next week, Jake. You can do better next week.
That's right. I will. No more rookie moves. I will do better next week. Hope all of you have a happy Thanksgiving. Cory, hope you have a great Thanksgiving. I want to hear about that dressing and that stuffing and Bob's famous, what was that, mushrooms and prosciutto wrapped something?
Yeah, the eggplant prosciutto. Yeah, and I might show up at the Falcon House on Friday for some turkey enchiladas.
Come on over, Cory. We'll have
the Chiefs game. How about that?
We'll have some enchiladas ready for you. All right. Well, thank you again, Cory, for joining us. And thank you all for tuning in. We hope you have a great holiday and a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.